This candle. Good morning, everybody. This is the morning show, Stock Market TV. Spencer Israel, JC Parets, Chart Master Rick with us this morning. Good morning, chat. Dawson in here nice and early. First one in the chat this morning. Risky Business, Steve Robinson. Good morning, everybody. I'll ask the same question I ask every day. What do you want to talk about? Maybe some earnings reactions. We got a few of those. Delayed jobs number. We got that. You guys care about that? No? Maybe? I don't know. We'll see what happens. Kind of interested in oil this morning. Oil is flirting with a breakout. That's kind of cool. But you didn't come here to hear me blabber. You came here for JC. You came here for his chart. So let's bring him on, and then we'll see what the show takes us. How about that? If you're watching us on YouTube, you know I ask this all the time. I appreciate it. Give me a like. The likes do help. Please and thank you. And on that note, here we go.
Mr. Spencer Israel, ladies and gentlemen, what is up? Happy Wednesday, hump day.
That's right.
My kids are starting to understand that camels do not say that. Hump day. They're starting to realize it, like, Daddy, that's not how camels. So for a long time, like cow goes moo, cat goes meow, dog goes roof, right? Like that's how we do it around here in our household.
Yeah.
And the camel goes hump day. So like my kids' entire lives, like that's what the camel says. And so we go to the zoo and the camel comes up and the kids are going hump day. And like, it's funny, but like they're starting to catch on that that's not what the camel says.
It's just not true.
Isn't that a little bit of a bummer? Daddy was just goofing all along, but they're starting to get smarter. They're like, Daddy, that's not, my teacher told me that's not what the camel says.
Yeah, just wait till they find out that pigs don't actually fly.
No, it's true. They love putting wings because they think like everything's a unicorn and has wings. They think everything flies.
It's going to be a bummer. All right, we did just have a few moments ago a non-farm payrolls number that came in well above the estimate. For those keeping score at home, we have been in a prolonged downtrend on a lot of the employment data for quite a while now. And I think we have the charts to show it. These charts obviously don't include today's number, but if you're looking at number of new jobs, unemployment rate, job openings, all things kind of going in the wrong direction for the past, call it 2 years, generally speaking. So this morning's number kind of flying in the face of that, which is interesting. The number came in well above estimates. I think the estimate was at what I see, like 55,000, 60,000 jobs. We came in at 130,000 non-farm jobs added last month. Let's see how they revise that downward next month. But for the moment, we have a number, so that's kind of cool. Are we moving off it at all? Have we moved it on in the last 5 or so minutes? Or not really?
Dow's up. Why don't we do a little state of the markets? I got some charts. Let's see how the market is reacting to the most important jobs number of a generation, right? The most important one ever.
Let's find out.
All right. So after the Super Bowl of jobs numbers, we've got the Dow Jones Industrial Average up 200 this morning. 200 for the Dow Jones Industrial Average. S&P 500 up almost 0.5%, 30 handles. That's 69.91. Still under 7,000, but right in there, 69.99, 69.90 to be exact. NASDAQ 100 futures up 0.5% as well, up 120, 25,340. 30-year bond futures down 0.5% with rates up, pushing 116 on the 30-year bond. We got crude oil up over 2%, 65.5 for crude oil. Copper up a full percent, 597, still under 6, but right there, 597. Gold up again, 50.67, up 0.75%. And silver leading the way this morning, up over 4.5%, 83.83 for silver. With the VIX still above 17, slightly down on the day, Over in funny money land, we got Bitcoin down 1,400, 67,350. Really flirting with that anchored VWAP from the lows, which is at 68. So technically right now below that key anchored VWAP from last Thursday's lows. We got Ethereum back under 2,000. We got 1960 down 3% for Ethereum. Let's see how that changes throughout the day on the most important jobs number in a generation. We got the old Solana 81.5 down almost 2% on the day. Total crypto market cap. Mr. Spencer Israel 2.27 trillion for all of crypto. Feels like just yesterday, 2.2 was just Bitcoin alone. Now all of crypto.
Well, it also feels like yesterday we were at 4. So
any farm payrolls today, or is it just the
or
just the non-farm?
Did not see anything on the farm payrolls. Just
I want to know when the farm payrolls come out. I mean, am I the only one? Seems like I am. Also, I don't know anything about the economy, but I have economist friends. Don't tell anybody. I am hearing that all of those job losses are coming from the government, and actually federal government employees, jobs have been going up. I don't know. This is what I hear. I hear things.
A lot of them are coming from the government, but really the main thing is that if not for healthcare, it would be way worse because healthcare jobs keep going up. But healthcare is kind of like keeping the entire job market afloat for the moment.
Dude, where I live in the Lehigh Valley, there's so much like medicine, like just nurses, doctors.
You're talking to a guy that lives in central New Jersey. We are pharma HQ. I can't drive 2 minutes.
So is it just us? It's like that in the rest of the country?
I don't know, but I live the other day. I drove past a street called Pfizer Way, right?
Perfect.
Like I'm not kidding. Like I literally cannot drive 2 minutes without seeing at least one major pharma office building. Right? I live near a Pfizer. I live near Insmed, a Merck, Sanofi's down the street, Roche is down the street. I live near like a dozen. Right.
The street name is interesting. You know, Spencer, I was walking in New York City the other day. Where the hell was I? I must have been. I was in Midtown somewhere. I was in the 50s. I was in the 50s, high 40s, walking towards the east side. And there was a street called Israeli Bond Way.
Israel bonds
random. As long as I've lived in New York City, I've never walked past Israeli Bond Way. That was the name of the street.
Israel bonds are a thing. Yeah.
Wow. I was just like, is that? I thought I was like dreaming it. Anyway, speaking of Israel, shout out Israel keeps making new all-time highs. But I want to talk about the dollar today.
I thought you were going to say industrials. Or sorry,
talk about industrials all the time. What's there left to say?
Homies had a great day.
I like that Freudian slip of homies and industrials.
Sorry, I meant to say.
One can argue that the homies are industrials, and that is argued on this network quite a bit. I'm starting to believe it myself. We talk about that so much. Okay, here's what I think is important to understand. There's this narrative out there about this dollar debasement and the weakening dollar, and the United States is turning into the next Zimbabwe. And that's what's fueling higher stock prices is this dollar weakness. And that's why gold and silver are going up and all of this stuff. There's that thesis, right? Great. What I like to think about is the opposite of that. Flip that on its head, Spencer. Flip that on its head. Rather than this weaker dollar narrative that's driving the bull market and risk assets, what if it's, bear with me, what if it's actually that there's so much demand for risk assets that the safety of the US dollar is simply not necessary, right? It's not the weaker dollar driving the risk assets. It's the demand for risk assets driving the lack of demand for the safety of the United States dollar. What if, Spencer Israel, what if it was like that?
I demand for some risk assets, not all risk assets. Clearly,
can you please throw up slide 3, if you will?
So, some risk assets are doing quite bad right now. So, All right. What is on slide 3?
You gotta be very, very specific when you're talking about some risk assets doing very bad. Very specific, because the majority of risk assets, as we were well aware, are doing extremely well. Hard to argue that there is anything out there more risky than the foreign currencies of emerging markets. Okay, emerging market currencies, guys. We're talking like, this is, you want to talk about high quality and safety. We're talking about the Malaysian ringgit, the Indonesian rupiah, the Hungarian forint, Turkish lira. These are the worst hot pieces of garbage on this here planet of Earth. Facts only. Facts only. So when you take a basket of 15 emerging market currencies, because everyone's talking about the dollar index, hitting multi-year lows this week. Great. But that's 57% euro. That's doing great. And British pound and yen and Canadian dollar and Swedish krona and Swiss franc. Forget that for a minute. Let's go out even further on the risk curve. Like, people talk about how shitty Europe is and euro sucks and everything like that. Great. But we can all agree that Europe is probably in much better shape than something like Indonesia, right? Or Chile, right? It's just a different animal, right?
Well, there are different levels of importance too.
Polish zloty.
Europe
so the point is, we're going out on the risk curve. We can all agree on that. And here we are hitting the highest level since 2018, Spencer Israel. Is it that the dollar is losing all its value and Trump and Weekend at Bernie's, like, they're all ruining everything and the Federal Reserve is printing money forever and like it's the end of the dollar? Or is it that there's just so much demand for these risk assets around the world that the dollar, that has been tremendous safe haven, look at the great financial crisis, the dollar absolutely ripped, COVID, like whenever shit is hitting the fan, money flows to the dollar. This is the opposite of shit hitting the fan. And so money's coming out of the dollar. What if it was like that? And then go look and see what is happening.
Well, then my question for you is, when did this whole dollar, I don't want to call it a crash, but when did the dollar really start to get weak, right?
The end of 2022. Remember the barons? Remember the barons with the muscle guy, and then also the psychedelic dollar.
Yeah,
from Bloomberg magazine?
Yeah. So
Right
so that was the high, right? But then also I'm really referring to like everything in the last 12 or 13 months, right?
Well, the dollar fell apart in the first 6 months of last year and then went sideways for the back half, and now it's potentially rolling over again.
Right. So my point is the last 12 months have been especially weak. But of course, we know the bull market has been going on for much longer than that.
No, I wouldn't say it was especially weak. I think that 2023, it got slaughtered, right? And then it went sideways, and then it got slaughtered again in the first half of last year, and now it's going sideways. I don't know. I mean, it's just a continuation of the downtrend for the dollar. But the point is, look at emerging market currencies. This has nothing to do with the dollar index. Look at when that bottomed. At the end of 2022, do you remember what also happened, Spencer Israel? At the end of 2022, the S&P 500 bottomed at the exact same time. Do you think that was a coincidence? Also, look at that 2020 bottom. That was the bottom of COVID, and emerging market currencies ripped from there. Notice how that line was going down during that period. That was the dollar going up because literally the world was ending. Literally. Yeah. Earth closed. Right? So when we're seeing new highs in emerging market currencies as evidence of risk appetite, why would you need to go into the dollar as a safe haven if you could buy industrials and banks and Chinese retailers, right? And then throw up, speaking of Chinese retailers.
Oh boy.
Oh, throw up the next slide. So we talk about China, the Shanghai Composite hitting new decade highs, great. But guess what? The rest of emerging markets look even better. China's only up 3% this year. The emerging markets index ex-China is up 13%, right? China had a monster year last year, 27, 28%. Emerging markets ex-China put up a 35% year, right? It's not a China story. It's an emerging market story, which to me reiterates it's a risk appetite story. There are demand for risk assets in a bull market, if you can imagine that. Can you believe that? Demand for risk assets in a bull market? So if that's the case, then why why on earth would investors be flowing into the United States dollar and the safety that brings? The opposite happens in healthy
you could just
environments.
as
That's what
easily
we're
say,
seeing.
well, first off, this chart is a lot of tech, isn't it? It's Taiwan, which is Taiwan semi.
Yeah, but it's less than you think. But yeah, sure, you're getting tech in there.
It's India, and then I can't really see what the third country is. It South Korea? I guess so. That's Samsung, right? So a lot of tech. Okay, that's the first thing. Second thing is you could also just say.
So it's Taiwan semis and Samsung are the biggest two components. That's 25% of the index. And then after that, it gets different. You got all kinds of different things.
Yeah.
Banks and stuff like that. So financials are 22.5%. Industrials are 8%. So a third of the basket is financials and industrials. Then you got another 8% basic materials, right?
Okay. But you could also just, like, you're saying that this is a flight away from safety to risk. You could also just say it's a flight away from the United States into
but the S&P 500 on an equally weighted basis just hit the highest levels ever. The Dow all-time high, small caps all-time high. So that's not away from the United States.
But relatively speaking, right? Relative to what's going on elsewhere in the world.
Well, also they're much smaller, so they're easier to move. Right? The Mag 7, you got $20 trillion in the Mag 7. So it's tougher to move the needle there. When you got a $1 billion industrial stock in Brazil, it's going to, a 50%, 100% move there is a lot easier, right?
I think the answer to your question is it's probably a little bit of both. It's probably a little bit of what you said, but also just straight up international. And you're seeing it. I see a headline every other day. So-and-so country is, selling their U.S. bonds to buy whatever, right? Like, there is a rotation out of the U.S. And so that also maybe equates to a rotation into risk because the U.S. is pretty freaking safe compared to emerging markets. So it's both, probably.
Macro uncertainty is pushing nations to use gold as a hedge against the dollar. And there you have it. Gold up, dollar down, not complicated. In theory, that might make sense, SM Traz, but if you notice, gold is making new highs, is doing what it's doing versus the other currencies as well. So gold in South African Rand also did its thing, and so did silver. Gold price in euro, gold price in Turkish lira, right? So all of those other Forex markets, they also lost value relative to gold and silver. It wasn't just the United States.
Well, that's what he's saying. That's what he's saying.
No, but all those other currencies are doing well. It's not.
Yeah, but he's saying gold is doing better, which, right?
Yeah, gold is a risk asset. People think that gold is somehow like this defensive, hedge. No, it's a risk asset. It's a bull market. The rocks are doing well. Guess what? In the 2000s, it was a bull market, and the rocks were doing well then too.
In the 2000s, it was a bull market for who exactly?
Stocks.
Not some stocks.
Yeah, you had the decline early in the year. Then you had a 6-year run into 07. 5-6-year run into 07. Then you had the great financial crisis, and then you had the run back up and absolutely ripped again. Yeah, the majority of that decade was a bull market, yes. And gold did very well. When gold did not do well in that decade? When the great financial crisis happened, gold fell too. Right? You know why? Because money was going into the dollar. Because the dollar is a safe haven, you see. So the fact that stocks all over the world are making new all-time highs, and the rocks too, or, did. Nobody wants the dollar because why would they?
Where do we draw the line when something is acting like a risk asset or vice versa, or acting like a safe haven, maybe temporarily, versus the long-term narrative of what it is or isn't? Okay. Crypto is acting like software stocks. Gold is acting like a risk asset.
Always has.
I don't know.
People just assume that because it did well in the 70s and there was a lot of inflation in the 70s, that somehow gold is some kind of like inflation hedge because that happened at the same time in the 70s. That's the wrong way to think about it, in my humble opinion. You guys can do whatever you want. You guys are grown adults. But in my humble opinion, gold is a risk asset. To treat it as anything else, I think is foolish. Silver too. Platinum, palladium, copper. These are risk assets, folks.
Okay, so gold is a risk asset that has just sucked for pretty much this entire bull market, except for the last couple of years.
Yeah.
Okay. It's not that gold. It's not that we were in a raging bull market for stocks, and gold is simply not a risk asset, so therefore it didn't.
Listen, at the end of the day, the stock market bottomed at the beginning of 2016. So did gold, right? So gold started doing well, and so did stocks. 2017 was one of the greatest years in the history of the stock market. Gold went up the entire year. 2018 was rough. Gold for stocks, gold fell. And then the market bottomed at the end of 2018 and had a killer 2019. And guess what gold did in 2019? Absolutely ripped. So yes, it is a risk asset. It's been trading positively with stocks, up and down with stocks, even recently. In the past also, but even recently. I just walked you through several ups and down cycles in the equities market and how gold acted. Yes, gold is very much a risk asset. Did it underperform for a while? Sure. Is gold outperforming now? Obviously, right? They're risk assets, folks. So am I wrong, guys? Am I wrong to think, is it ignorant to think that the dollar is not the cause, but perhaps the symptom of the risk appetite globally by investors? And there's simply just more demand for risk assets than there is supply of said assets, and therefore money needs to flee the safe haven of the US dollar in order to pay for those risk assets? Am I wrong?
I mean,
it's irresponsible because
not,
Zimbabwe and all this shit that they're telling me?
Look, it's not the craziest hypothesis. I'm not smart enough to know the answer to your question.
I don't know either.
Yeah.
I don't know either. God's honest truth. I have no fucking clue what the market is going to do next. I just like to think about possibilities. And, you know, if there's one narrative suggesting one thing, what if? I don't know, but what if it was the opposite? And it's the symptom, not the cause.
So then to bring this whole thing full circle then, and then we'll move on, the solution here is to just look at emerging markets and then allocate.
I think that's the extreme, like, you know, in your face way to look at it, right? There's other ways to like view what I'm describing, but like we're talking about emerging market currencies. Like these are the riskiest assets in the world. Like we're talking about, think about the countries I mentioned. We're talking about the Thai baht. Not where money goes when shit is hitting the fan. It goes to the dollar. Shit is not hitting the fan. So it's leaving the dollar. It's going to the Thai baht. Polish zloty. Philippine peso.
Okay.
You know what I think is cool about the Philippines? Everybody speaks with a Spanish accent, and they all the street names and stuff like that are like, especially like in Manila, like really they're like the old town Manila. They're all like, you know, Sant Agustin, and they're all like Spanish names, right? And they all pronounce them perfectly, like if they're fluent speakers of Spanish, but they don't speak Spanish. It's fascinating to me. I mean, some Filipinos obviously speak Spanish, but like in my experience, most of them, they speak English, right? And, you know, they pronounce all of the Spanish words as if they were Spanish speakers. It's fascinating.
Colonialism is a wild thing, man.
I get it, but like, it's just, you know, after all these decades, like still like having this, like, you know, right? I mean, it's just, you know, as somebody who studies humans and like the behavior of humans, like that's just fascinating to me.
All right, I want to bring on Kenny, but before I do, I want to just talk about earnings for 2 seconds. Can we bring up the beat report, please? The top beats from yesterday. We have the table, courtesy of the beat team over there. Shout out to Marriott. Again, we're looking at not just the numbers, but the reaction to said numbers. We care less if it's just an outright beat or miss, and more about what the reaction is within that context. So Marriott, the headlines were mixed, right? It was a revenue beat and an earnings per share miss, right? But what happened? We have the Marriott chart. Look at that. All-time highs. Best reaction. Is that true? 16 years? Wow. Great day for hotels, great day for Marriott. So shout out to Marriott. And then on the other end of the curve, S&P Global. Again, mixed report, right? Headline numbers, you know, top line beat, bottom line miss. Reaction, that says it all, right? So we talk about this all the time. You know, a lot of times we're talking about earnings reports from like the prior day, or even in some cases 2 days ago, because we want to see what the reaction is and have that tell us what to think, right? Forming an opinion about an earnings report, you know, a half hour, an hour after the report is out is a recipe for a reversal. And that's what Kenny does, right? He trades all those reversals. So we like the market telling us what to think. So good work, guys. If you want to get the beat report or the daily beat, I'll drop the link in the on the screen. Actually, I'll do that right now. And you can actually get these emails every day. It's free. So
no, this is great because this comes back to how I think about the markets, because we're, you know, what this does is telling you what the market thinks about the report, right? Not what anybody else thinks, the humans, the analysts, the media, none of that matters. This is strictly, very specifically with intent, the market's reaction. And so, you know, when the market is rewarding companies or the market is penalizing companies, regardless of what they said or did, you know, that is truly the information we're looking for. And they do a hell of a job. Nice job, guys.
Yeah. And then I wanted to, do we have that Robinhood? Yeah, let's pull up the Robinhood chart. I think, where's that at? There it is. Okay. So, how often do we talk about headlines coming out in the direction of the trend, right? So, you know, you've got this top forming, and this morning, Robinhood down 8% on a report where the headlines were largely positive, right? I mean, if you just, I guess it was a top, you know, I take that back. It was a top line miss. So headlines were not largely positive. But regardless, you've got a top on the chart, and now we're down 8% this morning. So it just goes to show that, you know, the sentiment going in is part of the equation, right? It didn't look good before this morning, and now it looks even worse. So,
but I bet you Kenny's looking at it from the long side.
I can almost, I don't want to say guarantee, but I bet you're right. So should we bring him out and let's see what dips he's buying or what rips he's shorting?
See it.
It's been a long time coming. They ain't come from my club, they took it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
I'm sitting here banging out trades, waiting my turn. Come on now, let's go, Spence. What's going on? What are you dancing to?
Him?
I just like it. I just like it when you're coming in hot. Give it to me, baby. Give it to me.
That's right. We are all over the place. The U, baby. The U. Let's go. We just crushed it on this trade.
Oh, baby.
Wait,
you.
So Unity down 25% this morning. What did you do? What did you do?
We got faux show bros, and let me show you the U. So we're live. We're live on TikTok. Say hi to the TikTok people. They're loving
What up,
TikTok. They're loving it. So I was just explaining the fake out, shakeout. And you don't want to wait for the VWAP break. The more savvy you get, or savvier, if that's a word, you want to be buying after the fake out, shakeout, buy it where it just faked out the people, using the shakeout as your out. And then by the time it gets to VWAP, you're already chickity-chinging, you're cashing out, and then it spikes through the VWAP and you're taking some more profit. And now we're sitting pretty with a little bit less. You know, we sold into this move, but I still got some. I'm not selling it unless it breaks 2150. And now, again, if you're trading pre-market, my friends, please have a good system. There are no stops. You better be, you know, ready to place these orders and place these trades and sell into the move like we just did with MNTN. Come on, Ryan Reynolds. You love Ryan Reynolds, right? You guys know about this stock?
Yeah.
Garbage, dog shit, worst. Another one of these garbage IPOs. Been going down. You want to see an ugly chart? Yeah. It's almost as bad as the Gemmy, which is another unbelievably awful stock. Thank you, Winklevoss brothers, for dumping some more dog shit on us. There you go. Look at that chart. Double top at 32.50. Maybe I should have sold. Maybe you should have, because then it went to $7. There's a healthy looking chart for you, but it doesn't matter to us because today they reported numbers last night, and you got a little faux show bro action. And next thing you know, we're selling into that move, and bang, cash to $12. But then there's more. Wait a second. Wait a second. What was those other three that we were looking at? Again, I didn't trade the stocks. I don't have it on there. But it is just unbelievable action in this market. And, man, it's just phenomenal because you don't have to own. I could come in liquid every day, loving this market, going right to the earnings reports and just banging away and having a good time. How's your morning going?
You know, no complaints, man. You know, coming in, long stocks, looking to buy more stocks, energy stocks ripping. You know, I'm winning. So I'm good with that.
I'm loving it, yeah. And I'm loving the fact that, again, I know this might sound crazy, but the Bitcoin trade has been all I've been watching now. I've been trading the Coinbase the last 3 days, MSTR ripping right now, phenomenal action, and that's why we'll be looking at Hood. If you're not looking at Hood today, what are you looking at? Right? Little faux show bro action there already. Everyone got paid except me because I didn't take the trade. Little faux show bro, test it down there, little VWAP break, and there you go, getting paid. So, man, oh, man, this – I say this every day. I never thought I'd live these days ever again. The 1999 days where every day was the most exciting moment of our lives. We're back, and we're so back, and we're here to stay. Day trading is so back, and if you're doing it without VWAP and trading around these earnings reports, you're doing it the wrong way because these trades have been working almost every time they show up. So,
couple things. First off, this one doesn't look that easy because you popped off that low, but then you retested it, right?
Right there where you failed. That failure gives you the next chart pattern, right? So they faux show you again, then you got twice the reason to get involved on the VWAP break like these guys did. And again, I'm too busy doing something else.
Faux show you again.
Right.
No. So in this instance, you are waiting for the break.
Right. Well, in this case, even better because when you get over VWAP and then 2 candles later you're holding it, that's confirmation of strength. And then you got that next liftoff. So great trade. Again, if you were anticipating it. And again, just a little anticipation. It's not speculation. It's anticipation. You anticipate, you wait, and then you strike like a panther or I guess a cobra. Yes. Gotcha. And that's all we do. And we stick and move, Rock. We stick and move. And we're on to the next one. And if this one doesn't stay above VWAP, you get rid of this one and you find the one that is. And just another shout out to the shorters out there. What are you looking at? What are you possibly looking at? Somebody said, are you afraid of the economic data this morning? Economic data? I don't have the TV on. Economic data? Good luck. Good luck being a shorter in the market. You got a 1-minute multi-day VWAP reversal. Good luck being a shorter in this market. You want a short? Remember this phrase. Shorting is short-lived and you're going to die. Have a great day, everybody. This is the greatest market ever. I'll see you guys in the room. Peace.
I'm pretty sure Kenny's TV has been tuned into the Golden Girls for like the last 40 years.
Dude, Kenny is like a WWF superstar of trading.
Yeah.
He's like, right?
Wait, and you know what? He brought up a good point, though. He is selling into rallies. That's what he does, right? So line go up. He's selling. He's not buying more. He's selling.
This is a real life perma bear right there, folks.
Yeah, but selling is how you lock in your gains, obviously. So,
but Kenny was like 100 pounds of steroid muscle, and like would talk with like a raspy voice. I'm a macho man, Randy Savage. I'm gonna get you, brother. Look at these pythons. Like Kenny's like that for day trading, you know?
Yeah. Look, if you want to be in Kenny's room, he sends a daily email, usually between the hours of 8 and 9, of what he's watching, what he's trading. Today's email was, holy crap. Today's email had how many tickers? 1, 2, 3, 4, 5, 6, 7, like 20 tickers in there. So he's busy. So the way to do that is go to hitthebid.com, join the room, trade with Kenny every day. If you don't like it, totally fine. But I think you will. I have a running fantasy in my head that I'm just gonna like move to Costa Rica and just wake up and just trade with Kenny for a few hours and then like go to the beach all day, and that's gonna be my life. It's never gonna happen, but maybe one day. That's my dream. Wake up, trade with Kenny, go to the beach. That could be your dream too, if you don't have a 8-month-old at home. So. To each their own. Okay. What else do we have here? I know today's going to be a little early for us, which is fine. But there was a couple other things I wanted to get to that I have in the deck. Oh, this is a great one from Grant. Actually, let's bring this up from the Daily Number, talking about how leadership in the market has flipped, which we've been talking about, here on this show for a little bit. But yeah, we talked about this. I think a couple days. I mean, every other day, really, for the last a little while. But yeah, the only negative sectors this year have been the ones that have been like the good ones. Right, so technology, discretionary, financials. This is a great way to visualize that rotation. So
this really is such a great chart. So let's break down what's happening here, guys. So this comes from Grant. Hell of a job, Grant. You're looking at in light green. Those are the sectors. Zoom in on that, Spencer. The green is the 2024 returns for the sector. So you can see over on the right in 2024 financials, consumer discretionary, technology, communications, they were the big winners. Even utilities had a good year. And 2025 is the red, right? So you're looking at technology, the biggest winner in 2025, communications, right? Financials were up there, industrials for sure. And then 2026, this year, what do you have? All those big winners from 2024 and 2025, they're all in the negatives. Financials, discretionary, technology, all down. What are the big winners? The ones that have been the biggest losers or the biggest underperformers, right? Not that energy was going down the last couple of years, just wasn't going up, particularly to the degree that the others were.
And hasn't this been the question? Hasn't this been the question, JC, that we've been asking for years now? Is what is gonna happen when technology lags for a period of time? What happens when we lose those leaders?
Well, I think it's twofold. I think number one, you're seeing it. The rest of the world doesn't give a damn, right? So that's number one. Number two, that can only be true up until a certain point, right? There's only so much losing that technology can do with the rest of the world and the rest of the stock market in America ripping higher. There's got to be a breaking point. So to me, it's, are tech stocks going down or?
Oh, there we go.
Right? Are you able to hear me okay?
Yep, we're good.
Yeah. Is it that tech stocks are going down or is that they're not going up? That's the big thing. And with the exception of software, that's literally been going down. You look at the mega cap tech, you look at large cap tech in the S&P 500, small cap tech, mid cap tech, they're not going down. They're just going sideways. So I think the answer so far is sideways for tech is okay. Underperforming for tech is okay. Absolute down, not okay. At a certain point, that won't be okay. But that's not what's happening. So
good. So for now, okay. Good.
Yeah.
That's all I need to know.
Sideways is okay. Sideways is not down.
Yeah,
down is
you're right.
Other animal.
You're right. Sideways. That's a very good point. Sideways is not down. So, good job, Grant. I highly recommend reading his email because he's in Australia. He sends it at like 4 or 5 a.m. Eastern time every day. So it's like basically the first or second thing that I read every morning. So get the Daily Number. Highly recommend it. Link is on the screen. Grant, and also in addition to his chart, Grant, I kind of let Grant be the one to tell me like what to think about the market overall. Are we like, should I be bullish or not? And he has a bull market checklist that he updates every week, and it kind of just tells you how good to feel about things. So I kind of outsource my opinions on that matter to Grant. So he does great work. And if you want more Grant in your life, I should mention we will be doing a show with Grant Hawkridge starting up very soon. So you'll be able to get more Grant in your life very soon.
I want to talk about something that we haven't brought up, and some people have been chiming in and asking me why we haven't brought it up.
What's that?
And I want to be the first to apologize, because this is something that I should be better at and more diligent, right? We should be talking about this in real time, not a few days later, especially somebody like myself who takes pride in this sort of thing. So I'll be the first to apologize for the delay.
Oh,
Better tardy than never, though. Better tardy than never. Can we do that? Throw it
All
up,
right.
Spencer. Give
All
it
right,
to
well,
them. Give
I
the people what
thought
they want.
I thought you were going to refer to this slide. That's where I thought this was going. But
Sydney Sweeney rings stock exchange opening bell alongside American Eagle CEO. Ladies and gentlemen, this is America. This is America at its finest. You have a young lady who is absolutely crushing, right? Shake what your mama gave you, right? And she's doing it.
okay,
And
but
there she is ringing the bell right there in the New York Stock Exchange, right there in the heart of capitalism. We're back, baby. We're back.
But actually you were referring to this, right?
I am referring to this. I'm not as cool as Spencer, who's in the know on Sydney Sweeney appearances. You know, Spencer's like in the know. I'm not. I must not be. I didn't get an invite to the New York Stock Exchange that day. You know that?
That's right.
I didn't get an invite. Nobody bothered me. Hey, JC, Sydney Sweeney is going to be at the New York Stock Exchange. Why don't you swing by and have some drinks? Nobody. Not a single call. What do you think about this, guys? What do you think about this?
If it weren't for the words, I wouldn't even know what they were talking, like how to interpret this.
I'm so happy that you said that. I'm so happy that you said that because I said the same thing. I'm like, is this bullish or bearish? I don't know.
No idea.
So I had to dig into my subscription.
Oh, you had to read. You had to
magazine.
read. No, you didn't read.
What do I do?
You had to read the article? No.
So it says the dangerous dollar, but dangerous how? Dangerous because it's going down, dangerous because it's going up, because the snake is pointing up. So, like, I don't know, there's dollar bill, dollar signs on the snake. But as it turns out, the article is actually the age of a treacherous falling dollar.
Okay.
So they're talking about, they're reiterating the dollar's falling here, right? Which is exactly what I started out. So here, the economist is telling your parents that the dollar is falling. Okay. Is that good for the dollar or no?
I don't know. I mean, like, are they wrong?
I don't know.
I guess this is my question.
Well, to be clear, they're never wrong, right? They're just publishing current sentiment. They're never wrong. It's just that by the time that they publish these magazines, it's everybody knows already, which tends to be late in the cycle. That's what that means.
I think some people know. I mean, it's been almost 6 months, right? Since that. No. Yeah. No. What am I talking about? It's been over.
Since what?
No, sorry. I'm on charts. Wrong time frame. I'm looking at much longer term chart. No, it's been basically, like I said, it's been 13 months since we've really kind of flushed on the dollar, and those highs were at this point. What?
I mean, really?
3.5 years ago.
13 months? You're really going to say that? It has not been only been 13 months.
Well, the highs were from the end of 22.
3 years.
It's been
3 years and a quarter.
3.5 years, sure. But I mean, most people are probably made aware of the dollar falling in the last year. The last year is really when sentiment has picked up.
No, you're probably right on that. I'll give you that one. I'll give you that.
I would say if you ask people what has the dollar done, if you asked them a year ago, no clue, no idea, and actually, not only do I know, I don't even care. Right? A lot's changed in the last year. I would say people probably care more about the dollar, and/or are more aware of it. So,
well, probably gold and silver doing what they're doing probably helps on that.
Yeah, certainly that's part of the equation. Yeah. I don't know.
So Spencer, let me ask you this. Here we are, almost halfway done with Q1. What, for someone like yourself who reads more of the research that comes in and out of here than anybody else and talks to everybody and listens to everything going on, what do you think stands out the most as we approach halfway through Q1 so far for 2026?
It's the same thing that was happening last year, which is sort of this great rotation, right? Am I just one of several million American schmucks that are just like totally offsides in my allocations to America, right? And The answer is probably, right? And obviously, this isn't a brand new phenomenon, but it's one thing to like see it, and it's another thing to like do something about it. And the evidence just every week it just gets more and more and more obvious that you know, I need to be diversified internationally, right? Not like emerging markets per se, just internationally, right? Just not just the U.S. I think a lot of the stuff that was happening at the commodities market was kind of to what Steve was saying. Steve missed a trade, and then he was like, "It's not for me." I was the same way. I missed a trade. It's not for me, right? The silver and the gold, these moves are crazy. By the way, I saw a headline that the world's largest nickel mine is going to curb production, so higher prices there too. But that trade, not for me. The international trade is a trade that it's not a trade actually. It's a long-term reallocation.
It's a lifestyle. It's a lifestyle.
It's a lifestyle. It's a lifestyle. So that's sort of like the biggest thing that I think about is how do I do that reallocation? Whitesell's talked about this. We've talked about this, and that's kind of my biggest focus right now. I don't really think about the Mag 7 like hardly ever because they are what they are at this point. I'm thinking more about international markets than I have at any point in the last like 5 or 6 years. So,
so that's interesting. So, as somebody who always looks at international markets, right, as you're well aware.
And then I think my mistake last go around was I bought a very broad international fund, which was not the way to go about it. It was just too broad. These international funds are just too broad, I think. Right? You have to get a little more tactical in terms of continent specific, country specific. I think, but just buying the VEU, which is the Vanguard XUS, is just. I mean, it's fine, but you're not gonna, it's not gonna do a whole lot for you. Is sort of where I'm at on that. So.
For me, I think it's the lack of action in the bond market.
Yeah, you've been talking about this.
The lack of, the 10s, everything's at the same place it was coming into the year. Nothing. Think about it. Bond market is dead. Continues to be dead. To be clear. Continues to be dead. Stocks like it. That to me stands out. And then, you had some volatility in Forex markets. You've seen some volatility in precious metals, most definitely. Forex a little bit, but definitely in precious metals. Energy's been the best performer. You'd think, given all that information on what's happening in the commodities market and what's happening in these Forex market to a lesser degree, but there's some action there. The bond market is dead. Dead. You would have told me all that other stuff was happening. I would have said you're getting some action in the bond market, right? Bonds are falling apart. Rates are ripping. All hell's breaking loose in bonds.
Is this the calm before the storm?
Well, yeah. You could have said that's, 2 months ago, right?
Oh, yeah.
So maybe, I don't know, to be clear, right? I have no way of knowing. I could just, when we talk about like we're halfway through. I'm looking at the yield curve here because I do that sort of thing. We're about halfway through Q1. So I think this is appropriate enough sample size to be like, hey, what's kind of stood out the most so far in 2026?
When would you say things have been dead since like October?
No, years. In the bond market? Yeah, years. Yeah.
Yeah. Well, so going back to like 23.
Look at the U.S. 10-year yield going back to the end of 22. Do you remember what happened in October of 2022, Spencer Israel?
Yeah, the index is bottomed.
Index is bottom.
But
interest rate.
But as I have since learned, breadth had already been expanding for months. How did I do?
About 3 months. And credit spreads had been narrowing for 3 months also, by the way.
Okay.
And then bonds interest rates peaked in October of 2022.
The bull market was already going, right?
Yeah.
Okay.
That's right. You tell him, Spencer.
I'm just.
And then the S&P 500 bottomed, and stocks started doing well when bonds stopped doing anything. Bonds stopped moving, literally dead, since October of 2022. And guess what?
I don't know. There was some. There's some action in 23.
It's just a choppy, hot mess. Choppy, hot mess. Choppy, hot mess.
I mean,
and some people chiming in here. Spencer, disappointed by your take on gold and risk assets, etc.
I saw that.
It's going up because central banks are buying it. They're not YOLOing FFs. What are FFs?
FFS, for fuck's sake.
Oh, for fuck's sake, not federal funds. Got it. FFS is for fuck's sake. All right. All right.
Yeah.
Well, for fuck's sake, Michael O. I'm sorry that you're disappointed by my take.
That's what makes a market, doesn't it? People don't always agree.
And then one of the things that you'll learn about me is that I'm turning 44 this weekend. I don't give a fuck. I don't care. Gold can go to 0 or 1 million. I'm good either way, right? The stock market could triple or get cut in half. I'm good.
No.
The dollar up, down.
Say that.
I don't care. Unemployment up, down, inflation up, down. I don't have any control over it. So I don't worry about the things that I can't control. I focus on the things that I can control, and that's being on the right side of trends. It's managing risk and take care of my portfolio so I can take care of my family as a father. We have clients that pay us for, perspective on the markets and trade ideas, right? And I tell it like it is. I don't give a fuck. I'm too old, out of fucks to give. When I was in my 20s, I did give a lot of too many fucks, actually. And during the great financial crisis in 2008, when I was betting that the world was coming to an end and I was rooting on the world coming to an end, I felt guilty. I felt like I was doing something wrong. I felt bad. And that was a mistake, but I was young and stupid. So, and then COVID, same thing. We were all crushing it during COVID, and literally the world's falling apart. It's coming to an end. There's nothing I can do about it. It's not my fault that this virus from a bat in China or whatever is killing all these people. I had nothing to do with it. All I can do is try my best to make as much money from it as possible, and that's what we did. And here we are today. I don't know about whether the government is printing money, for fuck's sake, or, the end of fiat. I don't know. I'm just trying to make a buck from the whole thing. That's all I could do. That's all I could do. So the good thing for anybody listening out there to anything that I have to say or any of my charts or anything like that is that I'm looking at things from an unbiased perspective. I don't care. I don't care.
No, you have biases. We just haven't found them yet. But you have biases.
In the market, I have biases? Like what?
I don't know. Someone help me out. No one's immune from the bias. You might have less of a home country bias.
Listen, I'm aware of some of my own biases. Like, remember, I came up in the 2000s during a commodity super cycle, during an environment where emerging markets in Latin America and China was all the hotness. The rocks were doing great. Energy was doing great. Oil went to 150. Financials were, driving the market, and then they collapsed the market. Like, I came up in the 2000s. So I'm fully aware of my cyclical mentality, right? So I have to overcome that. I think I do a good job of that.
What if this time really is different, JC? You ever think about that? You always look at history, right?
I know for a fact that this time is different because it's not different this time. It's different every time. So I know it's different. I already know. We know. Okay. It's always different. It rhymes. It rhymes. They look similar.
Okay. Yeah. I should have seen that one coming. All right. Whatever. All right. Here we go. Let's go. It's 9:25. We got to hop. Markets are about to open 5 or so minutes. So we'll let you go before that. It is Wednesday. Wednesdays are super busy for us on the channel. Kenny is live at 11. Sean is live. And if you have any question about options trading, options buying, options selling, options spreads, you want to start trading, ask Sean your questions live at noon today on YouTube. What are my options? Jeff Mackey's going live at 1. He'll talk a little bit of Target. Oh my God, Jeff nailed his Target call. Jeff said on December 31st that his turnaround pick of the year was Target. He put on a trade about it, and he's
chart looked great too. I showed him the chart. He wasn't convinced yet, and then he did some homework.
His turnaround trade of the year is already done. It's the second week of February. It's crazy.
Good, nailed. If you're not listening to Jeff Mackey, like there's nobody in the world who knows and understands the consumer like Jeff Mackey. Winners and losers. There's nobody. I don't even know who would be second best. Like there's no like, like in the ETF world, you've got like Balchunas and Todd Sohn and like. You got like a few. In this world, you have Jeff Mackey, and then I couldn't even tell you who number 2 is.
There's one other guy, but he's not great for like the stocks. He's more great for like the businesses. Like he talks about like the business, but then he doesn't take it to the next level with the stocks or the trades. And Jeff does that, right? So from business to investment. So I don't know anyone that does it like he does. So.
A fun fact, Spencer Israel, one of my first media appearances ever before I started whoring myself out all over the news networks was being interviewed by Jeff Mackey on Yahoo Finance in that network.
Oh, wow.
That was one of my first interviews ever. That must have been like 2012.
Wow.
And then, that kind of set the stage for a little bit of a mini TV career. And then I got the fuck out of New York and I went to California, and that was the end of that. But nevertheless, those are good experiences. I was, nervous, you had butterflies in your stomach before going on the big screen. That was a big deal for me.
Well, that's why they keep those studios nice and cool. So, because you're sweating because the lights are hot and you're on TV.
Dude, I've been in some of these studios where it's so hot and I'm just sweating balls. You can feel the sweat going down your back. And then I've been in other studios where they take it the other degree. It's
so cold.
I'm dying. It's so cold.
They keep it that way on purpose. All right.
No, I know. Okay. I prefer the latter.
And then don't forget every Wednesday at 5, Riley's going live to talk about the future and how we can all make money from it. So we got Godspeed, we got options, we got retail, we got Kenny, full day on the channel. We'll let you go. Thank you for watching. If you want to sign up for any of our free emails, use the link in the description. We have the Strazza letter, daily rundown from Stock Market TV, Alfonso's chart of the day. So much content, not enough time to consume it all. That's the biggest problem. Thank you for watching. We'll be back tomorrow morning. Go make some money. All right.
It's a Cuban accent with 15 years in New York sprinkled in. That's what that is.
Okay.
I can't take no loss. I don't even know what it costs.